So Seabury Trade Finance is a subsidiary of Seabury Group, and Seabury Trade Finance specifically, we focus on financing supply chain networks and providing finance against data transactions. We're a bit unique in that we don't necessarily look at purely the credit and financial strength of our clients, but we look more at the supply chain data that they have ongoing with their customers or their suppliers around the world. Traditional trade finance and traditional supply chain finance is mainly looking at the strength of a buyer's credit and providing finance to suppliers around the world. The challenge with that, though, is that the banks are also going to be looking at the supplier's own financial strength. And the traditional part is that they will always look at what type of hard asset collateral they can obtain from that supplier. In particular, they're going to be looking for personal guarantees, often in the form of, let's say, a mortgage on a house or a lien on a house type of scenario, so that in the event that there is a default, what are the other assets that they can claw back on? And this is where we differentiate ourselves, because we're looking more at what are the stream of transactions that they have and looking at that continuation as sort of cash flow that then we have as collateral on that supplier. So what's happening today with technology is, one, there's a lot more data available. The traditional paper-based transactions are now becoming digitized. Now, there are a few fronts on that. One is that traditional paper-based, you really don't know what is the most current data. A purchase order, for example, may have already been changed. It may have been canceled. If you look at processing that as traditional paper, a supplier may take that to a bank or a financial institution, but in reality, that purchase order may have already been canceled. And so if you finance against that, there's actually higher risk. In our mind, we can tap into supply chain data. There's much more updated data that's available, and it's much more precise. So we feel it's actually a much more secure method of financing. We believe that supply chain finance, when you look at it, it really should be financed against the different milestones that you can obtain through that supply chain data. That's one aspect, that we have the transparency and the visibility, also the risk mitigation, because we know exactly what's happening with a supplier, their transactions, and the orders and invoices and payments coming from their suppliers. So that's one area that we capitalize on. The other aspect is, with that data, we can also bring in other data sources to help supplement that and help make our evaluations. So all in all, when you look at big data and everything that's available today, we really should be able to make much better financing decisions that are both secure and more accurate. From a supplier perspective, they're getting squeezed on all different sides. And one of the other aspects is that the financing that was traditionally available from the banking institutions is also becoming more scarce. And that's because of all the increased bank regulations that have come about since the financial crisis. As a result, suppliers need a lot more help on their cash flow. And in particular, they're carrying more inventory because they're shorter production lead times, as well as their buyers are extending a lot of the payment terms. And because of that, we're now there to provide that alternative capital. In particular, we're starting at a purchase order level at the manufacturing time frame, so that the supplier has the funds that are available to pay for their raw materials as well as pay for the production. What this does in terms of helping the buyer is that it's really assuring the ability that that supplier can perform and can supply the goods. And the key thing for a buyer is making sure that they can get the right goods at the right time, at the right place, and at the right cost. What's special about what we're doing? We're working with GT Nexus. GT Nexus has a very unique legal framework that they have set up with their membership base. It's something that we're very familiar with. The unique part and the strength about Seabury Trade Finance is that we're very familiar with this type of supply chain network. We're familiar with supply chain practices. Even though GT Nexus helps to standardize many of the practices, and they're able to provide best practices, each supply chain still has its unique attributes. And that is an area, because we do understand supply chain, we're able to understand what are those differences, as well as how do we overcome any challenges that may exist. And that's something that traditional finance providers simply aren't able to comprehend, simply because very few bankers understand supply chain, and traditionally people who understand supply chain don't understand finance as well. Well, I've been at Bridges many times, actually since even the first Bridges that existed. Bridges is always a great gathering of supply chain experts, logistics providers, as well as customers and finance providers that are active on the GT Nexus network. And it's always great to see the innovation that's happening. And you hear a lot of the positive experiences that all these customers and partners have.
Seabury has a part of a division called asset management, and which is supervised under my jurisdiction. Aside from trade finance, we do manage various asset classes. We tend to make receivables and repackage them and restructure them, put them into portfolios. And trade receivables as one of the oldest receivables in the industry and in the world is one of the asset classes that we are looking at to package and put into a portfolio, whereby we all know that trade receivables is being financed every day through banks, factorers, and or investors. Even individual investors are trying to get into that arena. We feel that trade receivables could be made as one of the alternative investment class, but we want to bring this into the institutional investment world, which means something that an institutional investors would be able to invest in without spending the time necessary to do each and every trade, know the client, due diligence, and all the above, which takes a long time. And in order for us to do that, we look to a partner, which we luckily is able to learn a lot about GT Nexus. And the fact that GT Nexus database is complete, thorough, transparent, allows us the ability to look into and give us the insight of how significant those performance data could be standardized amongst all suppliers / borrowers, gives us the ability to scale that and rank them accordingly. And by being able to do that, we basically able to rate them as if we are a rating agency, but give it a shadow type of a ranking system. And luckily enough, when we look at what is being collected over the past decade of history of the performance of these buyers and suppliers, we are so happy to see that the default probability, if we had to do all the calculations and probability ratio, the default ratio is so low that it packs this to a highly rated security. And our goal is to make the investment, instead of a purchase of a receivable on a transaction by transaction base, we are looking to make this into a form of security, and thereby a institutional investor or a commercial bank or a private corporation or any retail customers that's high net worth can see that this is a security and that they can purchase it, which allows what we call insurance companies out there that are looking to put their money into use and invest in this asset class, be it not able to only because it is not in the form of securities. So we are trying to enable this by packaging a portfolio of eligible trade receivables. And in order to do that, we are able to tranche them into eligible securities for a much bigger gamut of investors out there. My job at Seabury oversees these asset classes, including trade finance, And we do from origination to structuring to managing the asset class, and most of all, making sure that the investors return and get the principal and the return before anything else. And we act as both principal and servicer to the asset class. And by partnering with a GT Nexus, which is our first partner to enter into this arena, we feel really comfortable that this is going to provide a portfolio of high-performance asset class. The form of securities that we are structuring is mostly going to be placed U.S. and outside of U.S. It's global. Obviously, the suppliers on GT Nexus platform are mostly outside of the United States. So the borrowers are outside of the United States. And the receivables that we are purchasing from either North America or Europe, because that's where your buyers are sitting. Initially, the credit that we are evaluating is on the supplier's performance data that they have been as a member of GT Nexus via your membership agreement, which is extremely powerful, allows us to depend on that settlement platform that you have set up and the standardized type of documentation and the definition of all your terms are completely the same on each of the buyers and suppliers, which makes us able to rely on and be able to do such a portfolio type of a structure because it's very uniform. This is my second year at Bridges and I look forward so much to 2016. I understand it may be at a different state, but no matter what, I think the venue is getting bigger. The staff is unbelievable, it's so well organized, and we get so much out of the information and the gathering and the networking. I just look forward. I think anybody that wants to get involved in trade finance and supply chain, whether you are already a customer of GT Nexus or not, should attend because you will be convinced why you should be a customer of GT Nexus.